All right, welcome to today's conference call. Today is Friday, September the 11th, 2015. We are getting ready to get started here, and we're going to be talking about several things today. It's a big, big day for many people who are investing in this market. We're going to talk about several reasons why. Today is Free for All Friday as always, so feel free to type in any question about anything, and we'll try to get to it, time permitting. I do have much to cover, so let's go ahead and dive right in. First of all, taking a look at the markets are remaining kind of in this locked trend right here. We're noticing somewhat of a triangular pattern that is emerging. In fact, let me show you what I'm seeing here, that we've drawn these resistance lines and support lines that we have been using on our market barometer page. And you'll see here that we do have quite a bit of resistance at this 1972 level. We have broken it a couple of times to reach up to this 1991 level, but that's it. And so we really don't have a lot of hope of breaking past this because we have so much overhead resistance right in here that in order to get past these levels is going to require gargantuan amounts of demand. Now remember, demand is going to have to come from somewhere. I mean, where are we going to get this demand? Who's going to come out and buy stocks? Well, again, not to sound like a broken record, but there are two things that you've got to watch and ignore all the other noise. Chinese stimulus, right? That's the first thing you're looking for. And secondly, you're looking for Fed intervention of some kind. So these two guys right here, these two market forces, are what could pop this thing past this area. Now, because that's a reality, because that could happen, theoretically, I sent out an email to you earlier in the week telling you that I was purchasing. There is an idea known as hedging, and it's a very important concept for traders to grasp, especially new traders, is that, imagine yourself on a boat. You know that if you're on a boat and everybody gets on one side of the boat, what happens? Well, it could possibly tip over. And if you're doing that and then suddenly a wave comes, from the other side, it's really going to knock you over, isn't it? So you don't want to wash out. It's important for us that as we build our put positions, as we're buying puts on stocks or buying puts on ETFs, that we have a little bit of insurance on the other side. There's this old adage that you may or may not have heard before, and it goes something like this: sell Rosh Hashanah and buy Yom Kippur. I don't know if you've ever heard of that before. It's kind of like a sell in May and go away. Let me show you this here. This is from Bespoke. They got some good stuff. This is an older chart that I was able to dig up out of our file. So I was thinking about the Trader's Almanac. I pulled out my Trader's Almanac, and I was looking at it. And, of course, Monday, Rosh Hashanah will be in full effect. Rosh Hashanah, which is a Jewish holiday, begins in the evening of a Sunday evening. And it ends in the evening of Tuesday, September 15th. So the 14th, technically, for market purposes, is Rosh Hashanah, right? I mean, this is right here. I mean, we are, this is it. And so some folks sell their holdings between this Rosh Hashanah and which is the Jewish New Year, and the Day of Atonement, which is Yom Kippur. And so again, it's sell Rosh Hashanah, right, and then buy Yom Kippur. Now, how has this worked out over the years? Well, you can see that during this time frame, and by the way, when is Yom Kippur? That begins the evening of the 22nd, and it ends on the evening of September 23rd. So September 22nd to September 23rd, that's Yom Kippur. So that is the Day of Atonement in the Jewish calendar. And so going back and taking a look, Bespoke did a research on this and found that, during this time frame, it's a pretty good time to sell, right? It's a pretty good time to be out of the market. 2000, the market was down. S&P was down in 2001. It was down in 2002. Rose in 2003, but again, down pretty dramatically in 2005. 2008 was a terrible time. 17% of the downfall occurred during that week. Maybe 10 days. So that was a bad time to be in the market. 2012, the same thing. We don't have the latest numbers. We could go back and look at them. But anyway, the average is the market's down about 1.43%. They view this time period on the religious calendar as a time to kind of cleanse themselves and kind of, remove themselves from mammon. They sell off, and then they come back into the market after they have gone through this, to this religious period. And it makes total sense. For whatever reason on the calendar, it tends to also be a negative time to be in the market. So sell Rosh Hashanah, buy Yom Kippur. FYI, people are doing that. So you want to be aware of that. And that's good for our puts, no kidding, right? I mean, that's where you want to be. You don't want to be long during this time frame because sometimes markets get skittish. So the 14th, I guess, will be the 13th was the big day whenever Rosh Hashanah begins. But the 14th is the day that many people think the market could potentially implode. So next week is really interesting. And then you have the 16th and the 17th, which are going to be the FOMC minutes. All right. Short sellers increasing bets on major biotechs. We are one of them for sure. We are short selling or buying put options on biotechs. Here you'll see that the short interest data coming out for the August 31st settlement date, biotech companies are being shorted. And you can see here that Amgen is one of them. The short interest jumping to 9.4 or 9.24 million shares from the previous level. Biogen is among them. We are short Biogen, Celgene, Gilead, Mankind, and Alexin. So these are the companies that short sellers are really increasing their bets against. Biotech extremely frothy, based on not a lot of earnings, and a heads up on that, confirming our trade on Biogen, showing that we are among many people who feel the same way. I don't believe that we're going to see a Fed hike. However, we are on the edge right now of something big, and people feel it. I mean, people certainly feel it. You're going to see it in some of the headlines that I have here this morning, that the Fed, there's a lot of pressure on the Fed, even though they probably weren't even planning on raising rates at this one. It's almost as if all eyes are on them. And if they do, they're damned, and if they don't, they're damned, right? Because you have some people who say, well, they need to raise them, because if they don't, it's going to show a lack of confidence in the U.S. economy, and it's going to conflict with the data. And then you have people on the other side of the coin saying, gosh, if you raise interest rates, you're going to destroy the entire economy, right? Like the World Bank. Chief economist warns Fed to delay rate raise. The U.S. Federal Reserve risks triggering panic and turmoil in emerging markets if it opts to raise rates at its September meeting. I mean, what kind of welcome is that? From the World Bank, basically saying, do not do this or you will cause panic and turmoil. They're just another growing voice in the chorus. IMF warns against rate rises by leading economies. And what kind of pressure is this putting on the Fed? NUGT going down 7%. Because I'm not, because I don't own NUGT, because it's not something that it's not a core holding of mine, I don't really worry. I wouldn't hold the ETF. These things aren't really designed to be held. These are really trading vehicles. And so that's why I bought the call option. If this thing goes hog wild because mining, gets a break, then, I'll make money.